Welcome to the deep dive. We take a stack of information, market reports, policy releases, earnings calls, research notes, and we really try to cut through the noise.
Yeah, find the important insights, the surprising facts, the stuff you actually need to know.
Exactly. We want to make sense of it all, extract those crucial nuggets specifically for you.
And today, well, we're navigating some pretty significant currents. Global markets, policy, tech shifts, business moves.
It's definitely a complex picture. We've got quite the stack of sources to help us unpack it all.
Absolutely. So let's dive in. Maybe start with the global economic landscape. Looking at recent market movements from these sources, it's been, well, a bit of a mixed bag lately.
Yeah, you saw that in Asia, right? Markets were trading mixed. Japan's Nikkei and Topics, they finished up. But then South Korea's Kospi and China's CSI 300 were down. Hong Kong's Hang Seng eked out a small gain.
And it's interesting how quickly things ripple globally. U.S. futures, for instance, they jumped pretty much right away on the news that those planned EU tariffs were delayed.
Right. And speaking of defying expectations, the S&P 500, wow, having a fantastic May, up around 6% late Wednesday.
Yeah.
That puts it on track for potentially its best May since, 1990?
Since 1990, it totally throws that old sell in May and go away saying right out the window.
Doesn't it just?
And the data often contradicts that kind of market folklore. Reports show other bits of Wall Street wisdom, like a June swoon or summer rallies. They don't really hold up statistically either. June, historically, it's just kind of an average month.
Good context. So don't time the market based on rhymes, maybe?
Probably not the best strategy. Elsewhere, spot gold was trading pretty flat after that US-EU tariff delay news. It had dipped earlier in the week.
Okay.
And we saw some movement in bonds and currencies, too. Japan's super long bond yield slid a bit. There were reports their finance ministry might reduce how many of those they issue.
Right, affecting supply. And Asian currencies, they rallied against a weaker dollar.
Yeah, the yen, Taiwanese dollar, Malaysian ringgit, all strengthened, and the weaker dollar. Some sources are pointing to fears about potentially ballooning U.S. debt.
Linked by some to President Trump's tax bill specifically.
That's what some reports suggest, yes. The South Korean one, though, was pretty flat through all that.
Okay, so this brings us, I think, to a really big theme running through everything we're seeing. Tariffs. Trade policy uncertainty.
It's pervasive. You see it playing out with President Trump's sort of back-and-forth approach.
Like threatening 50% tariffs on the EU.
Then pushing the deadline to July 9th.
Right.
Or initially cranking up China tariffs to 145% on something.
I'd like to drop them back to 30% after talks happened.
And this volatility, it's actually led to this term on Wall Street, the taco trade.
Taco?
Yeah, it stands for Trump always chickens out. It describes investors who basically bet that he'd soften his tariff threats after making them, and apparently some did pretty well with it.
Huh. And the president's response to that idea?
He's reportedly pushed back, saying it's not chickening out, it's negotiation. The idea being that the shifting plans are a tactic, to strengthen the U.S. position.
Right, a negotiating tactic.
But whatever the intent, the uncertainty itself, it has real tangible effects. Our sources show it influencing broad economic sentiment and specific companies.
Like consumer confidence. That actually rebounded in May, the first gain in 5 months.
And the Conference Board's analysis directly linked that improvement to the easing of U.S.-China trade tensions after those talks. So a direct connection.
You even see it reflected in the Fed's thinking. The minutes from their May meeting?
Yeah, showed almost all participants were worried about inflation and unemployment rising together because of higher import taxes.
A tricky situation.
Exactly. Could force difficult trade-offs for monetary policy. It sounds like Fed officials felt a bit sidelined, sort of waiting to see how the tariff plans actually shake out.
And what's really insightful is seeing how individual companies are trying to navigate this. Think about retailers, right? Sourcing heavily from overseas.
ELF Beauty is a good example. They get about 75% of their products from China.
Wow, that's high.
It is. And they cited the wide range of potential outcomes related to tariffs as the main reason they couldn't give a specific financial outlook for fiscal 2026. Just too much uncertainty.
They are planning price increases, though.
They are, but they still expect tariffs to hit profits. And it's a delayed thing, too. They apparently paid duties over 145% on some goods before the rates were lowered. Those higher costs are only showing up now.
That's tough. And how does that compare to, say, other retailers?
Well, Macy's also cut its full-year profit outlook, citing tariffs. But they said they'll be surgical with price hikes, try to absorb some costs
Try
themselves.
not to scare off customers.
Seems like it. Abercrombie and Fitch, similar story. They actually beat earnings, stock rallied on strong sales, but they also lowered their profit outlook, suggested they'll also eat some of the cost of tariffs.
Interesting. So sales look okay, but profits are getting squeezed by this.
For some, yeah. Then you have Dick's Sporting Goods, also facing tariffs, but they had a strong Q1 profit beat and they're sticking to their full year earnings projection. So some are managing it better than others.
Shows varied resilience. And it's not just retail, right?
No, not at all. Stellantis, the big automaker, they withdrew their full year financial guidance completely.
Wow.
Yeah. Specifically called out uncertainties from Trump's trade policy. Noted how much tariff uncertainty hits the car industry with its, massive global supply chains.
So, yeah, companies across different sectors are clearly grappling with this policy volatility, cutting forecasts, eating costs, pulling guidance.
It's a major headache for them. Beyond tariffs, what other global policy shifts are jumping out from the sources?
Well, there's a notable development in Venezuela. Chevron terminated its oil production, service, and procurement contracts there.
Right. Following a U.S. deadline linked to the Trump administration's tougher stance. They are keeping their staff, though.
And analysts are projecting this could cause a pretty big drop, maybe 15% to 30% in Venezuela's oil output and exports by late 2026 if those licenses aren't reissued.
That's a potentially significant disruption to supply. Elsewhere, a major shift in global finance. Japan lost its status as the world's largest creditor nation.
For Germany, right, after 34 years.
34 years, yeah. And it's interesting, Japan's net external assets actually went up in 2024, but Germany's just grew even more.
Why the shift?
Reports suggest rising interest rates in Japan are making it less attractive for Japanese investors to send money abroad, kind of keeping more capital at home.
Fascinating. And here's one about perception having a real economic impact. Travel spending to the U.S.
Ah, yes, the projections there are pretty stark. Oxford Economics sees international tourist spending potentially falling $8.5 billion in 2025.
And the WTTC estimates it could be even higher, maybe $12.5 billion.
That's right. And this projected drop is tied to an expected roughly 9% decrease in international arrivals.
And experts are linking this, partly at least, to sentiment headwinds.
Yeah, related to the Trump administration's policy stances on trade and border security. One source literally said, perceptions of the U.S. matter. Specific concerns about U.S. immigration policy were mentioned, too.
Of course, a strong dollar and weaker global growth don't help either.
True, those are factors, too. But it's striking how policy perception can affect something like tourism.
It really is.
Yeah.
Okay, let's maybe shift gears now. Let's spotlight some key things happening in business and technology. Also seeing incredibly rapid change there.
For sure. And leading the charge, no surprise, is big tech and AI. Nvidia's latest earnings were, well, huge.
Blew past estimates, didn't they? Driven by that massive 73% jump in data center sales.
Incredible numbers. Overall revenue growth was 69%. Just massive demand for AI infrastructure.
But there was an impact from the China export restriction.
Yes, specifically on their H20 chip, resulted in about $4.5 billion in charges for excess inventory and an estimated $2.5 billion in lost sales.
Ouch.
And the CEO said the $50 billion China AI chip market is now, quote, effectively closed to U.S. industry.
Effectively closed. That's a strong statement.
It is. But the overall global demand is still booming. Their gaming, automotive, ProViz divisions also continued strong.
So still massive growth overall. What else in AI?
Another really interesting AI application mentioned is Palantir partnering with Fannie Mae.
Oh yeah, what for?
Using AI models to detect mortgage fraud. And the early tests sound amazing. Identifying fraud in seconds.
Compared to what, 2 months for human investigators?
Exactly. Seconds versus 2 months. That's a phenomenal efficiency gain.
Huge potential impact there.
And sources note Palantir's stock has surged since President Trump's election. The company's often seen as aligning with administration priorities like military modernization, government cost cutting.
Right.
Palantir's CEO mentioned they can do this fraud detection while protecting data privacy. And there's talk of expanding this to Freddie Mac, maybe even a partnership with Elon Musk's XAI firm.
Interesting. And that's happening while President Trump has talked about Fannie and Freddie maybe going public, but keeping those government guarantees.
That's the context, yeah. Meanwhile, over in the AI safety and development space, Anthropic made a big move.
Bringing Reed Hastings, the Netflix chairman, onto their board.
Right. And his stated reason. He believes in Anthropic's approach, wants to help focus on human impact, safety challenges. Seems he recently donated to Bowdoin College for AI research that aligns with Anthropic's priorities, too.
So, emphasizing a different philosophical approach in AI development.
Seems that way. And speaking of different viewpoints on AI, one source highlighted a pretty strange comment from Vice President J.D. Vance.
At the Bitcoin conference.
Yeah, he reportedly called artificial intelligence a communist technology, contrasting it sharply with crypto.
Wow, okay, that's definitely a strong take. Framing AI as centralizing versus crypto's decentralization.
That seems to be the framing presented in that report, yeah.
And just rounding out big tech updates, Meta AI hit 1 billion monthly active users.
1 billion, yeah. Zuckerberg is apparently focused on deepening the experience, personalization, voice, entertainment. And there are future plans, possibly involving paid recommendations or subscriptions. Shows how fast AI is getting woven into consumer platforms.
Absolutely. Okay, let's move into retail and consumer trends. ELF Beauty again, making headlines with that huge acquisition.
Yeah, buying Hailey Bieber's skincare brand, Rhode, for up to $1 billion.
That's a massive deal. How's it structured?
$800 million in cash and stock up front, potentially another $200 million based on performance. And Rhode's growth has been meteoric, $0 to $212 million in net sales in under 3 years.
Wow. With just 10 products, direct-to-consumer only.
Exactly. ELF CEO called it disruptive. Hailey Bieber stays on as chief creative officer.
So strategically, this gets ELF deeper into skincare, right? And targets a higher income consumer. Rhode's pricier than ELF's core stuff.
Precisely. Higher price point, different demographic. What's also notable is the financing ELF's using $600 million in debt at fairly high interest rates.
Shows confidence in that high-end skincare bet, even now.
Big bet. And remember, we mentioned earlier, while ELF beat earnings, that tariff uncertainty sourcing so much from China kept them from giving a full outlook. Those past high duties are still biting.
Right, connects back. And looking across other retailers again, we saw Abercrombie & Fitch had strong sales, stock rallied, but they still lowered profit outlook, planning to absorb tariff costs.
Yep. Macy's beat earnings, kept their sales forecast, but cut the profit view. Said they'll be surgical with price hikes, absorb some impact.
And Dick's Sporting Goods managed to beat profit estimates and maintain guidance, showing maybe more ability to pass on costs or mitigate them.
It seems so. It suggests that while tariffs are this broad headwind, how well companies manage it really varies. And that could affect the prices you pay or just their bottom line.
Makes sense. What about consumer behavior shifts?
Well, Shake Shack is rolling out its first loyalty promotions, starting with $1 sodas, future burger discounts planned. They explicitly said it's amidst economic uncertainty, trying to boost visits as consumers maybe pull back. They plan a bigger loyalty platform later.
Kind of mimicking competitors who've tweaked programs because of inflation hitting consumers.
Exactly. An interesting side note, Shake Shack has this really ambitious long-term goal over 1,500 U.S. locations. Huge expansion plan.
Wow. Shifting regions, what about those bubble tea companies in Hong Kong?
Oh yeah, saw a surge in share prices for companies like Mixu and Nayuki. Mixu especially showing strong gains, big international expansion plans.
The bubble tea empire grows.
Maybe. Conversely, Meituan shares slipped to an 8-month low. They beat revenue forecasts, but the CEO warned about intensifying competition in instant retail, making it hard to give guidance.
Tough market. And BYD.
Shares continued to decline after some recent price cuts, suggests ongoing competitive pressure in the Chinese EV market.
Okay. Let's pivot now to crypto policy, another area seeing some rapid shifts, especially from the U.S. administration.
A big one here. The Trump administration moved to rescind that Biden-era guidance, the one that cautioned employers about putting crypto in 401k plans.
Right, the old guidance talked about risks, needing extreme care. What's the new reasoning?
The Trump Labor Department says that extreme care standard wasn't actually required by the relevant law, ERISA. They're adopting a more, quote, neutral approach regarding specific investment types. Doesn't single out crypto.
So what does this mean for you, for your retirement savings options? Some experts quoted see it as removing a kind of yellow caution light.
Maybe sending a green light signal, yeah.
Oh.
Encouraging more crypto options in retirement plans, that's one view. Net Rostad called it a big mistake.
But there's another perspective.
Yes, Philip Chow suggesting it's not necessarily controversial, just treating crypto like any other alternative asset. But crucially, he notes, employers still have that fiduciary duty under ERISA.
Meaning they still have to be prudent, Act in savers' best interests when choosing any investment.
Exactly. And they could still face lawsuits if a crypto option blows up. So the official government tone changes, but the fundamental employer responsibility remains. It's not a free pass.
And this ties right into those comments from Vice President J.D. Vance at the Bitcoin conference we mentioned earlier.
Yeah, he was actively positioning the Trump administration as a champion and ally for crypto. Said crypto finally has a champion in the White House.
And he argued stablecoins aren't a threat to the dollar.
Called them a force multiplier of our economic might, actually. Expressed support for the Genius Act, stablecoin legislation, framed crypto as a hedge against elites co-opting tech for control.
Okay. And the source also noted, neutrally, this pro-crypto stance comes amid calls for an ethics probe related to President Trump's own crypto ventures.
Yes, mentioning the Trump meme coin and a family business stablecoin effort. That context was included in one source.
Vance also highlighted other regulatory shifts. SAB 121 repeal affecting banks and crypto custody, rescinding guidance from FDIC, OCC, Fed.
All presented as signals of a move towards a more crypto-friendly regulatory environment under this administration.
Right. Okay, nearly there. Just a couple other sector notes from the sources.
Nuclear energy saw some movement. President Trump issued executive orders on application deadlines for new nuclear plants.
And GE Vernova's CEO thinks this could speed things up.
Yeah, suggesting it could lead to U.S. small modular reactors, SMRs, being deployed by late 2030, 2031. Maybe construction approvals by 2027?
SMR is seen as the future, potentially lower cost, faster build times.
Right. GE Vernova already got approval for their design in Canada, applied with the TVA in the U.S. Says there's high customer interest, people willing to pay a premium for carbon-free nuclear.
Interesting development. And one last quick note. That dynamic between Elon Musk and President Trump.
Yeah. Sources mention Musk criticized Trump's recent Big Beautiful Bill, saying it boosts the deficit, undermines the work he did with the Department of Government Efficiency, or DOGE.
Trying to cut spending. And Trump's response?
Reportedly said politics involves compromise. DOGE claimed big savings, $170 billion, but related government layoffs caused pushback. And the source notes Musk has pulled back from DOGE work, saying it became a whipping boy.
Okay. So, wow. We've covered a lot of ground today.
We really have. From global trade tensions, currency shifts, policy impacting retirement savings, international travel.
To big tech moves in AI, consumer trends in retail, shifts in energy policy, government efficiency efforts.
It's so clear how intertwined everything is. A policy change on tariffs or crypto.
A breakthrough in AI, changing consumer sentiment. They all ripple across sectors. And they can impact your investments, your financial choices, where you travel, even the price of things you buy.
It's definitely a dynamic environment, often unpredictable.
It really is. And it leaves us, I think, with a pretty compelling question for you to consider as you process all this.
Yeah, in a world where technology is changing just incredibly fast and policy can shift almost overnight, how do you decide? How do you figure out what information is reliable and where do you place your bets, whether that's with your money, your career, or just, where you put your attention?